Hello, everyone. My name is Michelle, and I will be your moderator for today's 60-minute program. Thank you for joining us for today's webinar, Why Modernizing Your Existing Financial Process is Vital to Build a Cost-Effective Future, presented by CFO Daily News and sponsored by Tipalti. Before I go through a few housekeeping items, here's a short word from our sponsor.
Okay, here's a little bit about Tipalti, and you'll have all this information in your slides. And what Tipalti does, it's the only supplier payments automation solution that streamlines all phases of accounts payable and payment management workflow. Been working with Tipalti for actually a few years, and I'm pleased to be working with them on this webinar that you'll see today. Okay, and today's agenda, we're going to talk about why automation isn't really enough for a healthy and cost-effective future and what that means for your organization. We'll talk about developing a strategy of modernization to your advantage in your accounts payable process. And then we'll take a look at steps to easily optimize your already existing financial best practices. And when we look at automation and why it's actually not enough, I did a little bit of research on this, and one leading analyst predicts that by 2024, 60% of mid-sized and large organizations will employ cloud-based applications to automate and improve their financial close processes. So we're not only going to be talking about accounts payable today, but we're going to look at financial close as well and how accounts payable impacts that process. So what's happening is there's a need to reallocate accounting resources towards more strategic activities and do more with less people and fuel the business with more timely data. So the key points here are that accounting must prepare for business acceleration, and automation is an enabler to get there. And again, we'll be looking at improving our cycle time as well as reducing cost. And what's been found in some of the research that was done by Blackline when they did the Future of Automation benchmarking study is that sometimes there's an opinion that the finance function doesn't have the most illustrious record of successful automation projects. And what I've seen is that sometimes automation is done in silos, and as accounts payable as an example, sometimes we just look at automating invoice processing and we don't look at automating payments. And only half of the population that was reviewed in this benchmark study review automation opportunities on an annual basis, and a few never really do. So there's an automation gap that we're seeing. And sometimes we have the opinion in this benchmark study that almost half said their finance function has experienced little or no change due to automation. And where automation was attempted, only a third said that their projects have met their expectations. And though standardization of processes is a key objective for over 90% of CFOs, about half say that automation projects fail to meet expectations. And less than 30% of companies actively redesign their processes around all functional areas and business units affected by the process. So it's kind of an interesting topic based on that last bullet. Sometimes companies want to have the automation solution or the ERP solution in some cases meet their processes or match their processes, and they don't really look at improving their process or addressing process weaknesses when they're looking at an automation solution. Okay, so we have our first poll question, and we actually have 4 of these poll questions. And the question is, what specific financial duty impacts your financial team the most?
All right, yes, and that poll is currently up on the screen. We'll give folks a few moments to respond, and I'll share those results.
Okay.
All right, Chris, those results are for you on the screen.
Okay. I'm not seeing those results. Could
All
you?
right. We have 54% responded budgeting and forecasting, 23% responded processing accounts payable, 8% responded to each of the reconciliation process, the financial close, and internal controls. So I'll go ahead and close out that poll.
Okay, thank you. All right, so we'll talk about a strategy for modernization. And we'll start with roles and responsibilities. And we look at the roles of some of the key decision makers, which are CFOs and controllers, as we know. And these roles kind of vary. There's a lot of responsibility here. And when we talk about developing the strategy and who does what, we look at the stewardship, and that's preventing cash leakage and certainly protecting and preserving the assets of the organization. The second role for CFOs and controllers is an operator, aligning capabilities and costs. And that's the balancing act where we look at balancing capabilities, costs, and service levels to fulfill the finance organization responsibilities. And we look at the strategic part of the roles and responsibilities for CFOs and controllers. And that's really aligning the business and financial strategy and providing financial leadership and determining business direction and aligning financial strategies. And then a catalyst, and these are actually the responsibilities for changing behaviors to achieve objectives. And again, in my responsibility in finance at places like HP and MCI, we found a lot of change management challenges. And that's because there's been a lot of, well, we've always done it this way. The process is working. Why upset the apple cart and put in an automated process or change the process when we're going to be impacting people's jobs and certainly maybe not changing things for the better. And there's been some situations where automation has been implemented without really understanding the current process and all the dependencies and interdependencies of what needs to happen and processes, particularly like accounts payable as well as the financial close. So what's the changing role of the CFO? And we saw some of this in that black line benchmarking process. And it starts with data-driven decision making. Now, what modernization and of course automation helps is getting that data accuracy and creating one source of the truth for your data, pretty much across financial processes. And what the CFO is literally looking at today is information-based competitive advantage. So having that data and having that information is very key. Enhancing the speed to insight. And I really like that comment or that phrase, because if we have correct data in a more timely fashion, we can make decisions with informed data and certainly more rapidly. And the foundations of actually enhancing these roles are automating processes that we're talking about, extracting the value from information, and making decisions a lot faster. All right, so when we talk about modernizing the finance department or financial processes, we look at some specific pain points. And the first one is complexity and cost, disconnected systems and business processes. And we're having a data reconciliation nightmare. And of course, that impacts the transactional processes like accounts payable as well as financial close. And I've worked, again at HP as mentioned, and during the migration of digital equipment to HP, and of course, actually digital equipment to Compaq, and then Compaq to HP, we were dealing with a lot of different systems for transaction processing as well as the financial close. And one of the first attempts was to figure out, okay, what's our strategy, not only for the merger and acquisition of all these companies, but really what's our focus? And the strategy was easy to come up with because we knew we had to do a lot of fixing to do with disconnected systems. But with too many systems, sometimes we don't get an accurate view of the company's data, particularly during the financial close. And we have sometimes too many spreadsheets. And what happens with spreadsheets, we don't know if we have the right one, the current one, and sometimes the spreadsheets are in place because we still rely on spreadsheets because of the difficulty of accessing and aggregating data from across information systems in an organization. If you have multiple ERP systems as well as multiple transaction processing systems that are in silos, it's really difficult to get into a totally merged environment of that speed to insight or data accuracy. Not enough time. And being in finance pretty much my whole career is that time was always a big factor. There's overly complex closing procedures, and there's not enough time to really do a complete analysis of the effectiveness of a specific process. So there's not enough time to go back and analyze what the results are and actually see if there were any anomalies and possible risk with the financial close as well as transaction processing. And we've talked about data quite a bit, and untrustworthy data is a big one, and that's why we maybe have all these offline spreadsheets to prepare the reconciliation process. And what I found, particularly with the financial close, is that we don't have enough time to validate controls, and we sometimes do some very high-level analysis of the results. But we really need to have faith and trust that the analysis and the data that we're using for that analysis is correct. And sometimes during the financial close, particularly if we're in the middle of a quarterly close and certainly a year-end close, there's an awful lot of effort to make sure the results are corrected, and we do any management adjustments before external reporting takes place. And sometimes we don't have enough time and effort into actually identifying critical issues and possible fraud. And that's why having that data in a timely manner, you can go back and actually do some comparison. All right, so we're going to talk about modernizing finance and really start looking into what are the key components for a successful finance transformation. And we talked about strategy, and we talked about a proactive rather than a reactive approach to technology adoption. And the success of a transformation or a modernization is really based upon a focus on people, process, and technology. And I'll talk about this for a minute. In my years in finance at HP, we took a look at people in finance, and what we did was we developed a list of core competencies that were needed for the future. And again, no one has a crystal ball, but we can certainly take a look at what are the current core competencies of our finance department and what is really needed to move into a future transformation and modernization environment. So that was, okay, what is the as-is level of core competencies in our finance department, and where are the gaps? And that helps as we start looking at process improvement, which we talked about a little bit already, and then what is the best technology that is going to help drive and enable that finance transformation and modernization. Okay, and the financial close, I mean, we honestly live and die by the results and the process of the financial close, making sure everything is accurate. And you may wonder, well, why do I talk about accounts payable and the financial close kind of in the same sentence? And if we look at the chart at the bottom, there were really three components of the financial close. And it starts with A, the transaction accumulation, reconciliation, and subledger close, and B, the corporate close and consolidation, and C, the analysis and reporting or the final mile. And accounts payable, accounts receivable, any sort of inventory accounting, any transaction type of accounting is going to be an A. And my premise has always been, if we get everything in the transaction accumulation and reconciliation correct, then we don't have to worry so much about making sure that the consolidation is correct. That is certainly going to drive the analysis and reporting. And, again, our spotlight today is on accounts payable and on the financial close, because I really believe the two go hand in hand. If we get the transaction accumulation process correct for AP, guess what? You're not going to be worried about getting those accruals correct. And this is pretty much a good way to look at the financial close. It's a little bit simple, but it helps get the message across as far as what are the key silos. So here we're going to take a look at those key components, and then we're going to certainly map them back to the financial close. All right, so if we look at people, I mentioned my experience with core competencies, but we always look at setting expectations for finance and accounting. And the only company that really focused on setting the expectations and doing business plans for finance that I'm familiar with, again, several years ago, of course, is HP. What we did was a financial plan and started looking at expectations for finance and accounting based on all the different departments. And that included AP and AR and fixed assets, as well as inventory accounting. And it was establishing a culture of modernization. And my experience with that has been when Compaq was acquired by Hewlett Packard, we did a type of change management effort and started looking at establishing a single culture, because you're looking at two companies, again, that had very, very different cultures. And what we did was we set up a training program and across all the finance departments and North America, at least, to really look at establishing that culture of change, communication, and modernization. And we called that initiative the Fast Start Initiative. And it was really taking a look at how do we merge two very different cultures and start doing some of the things that we're talking about today. And under process, we had to prioritize a company-wide digital transaction environment and timely and accurate data to drive the need for data analytics and timely and accurate financial close. And I mentioned one source of the truth, and that was tricky in the middle of any sort of M&A effort. But if we think about what do we need today, if we have disparate financial systems, disconnected ERPs, several instances of ERPs, it's hard to get to that one source of the truth. And then with technology, we prioritize by asking, where are your biggest pain points? And several years ago, what we looked at was outsourcing accounts payable and outsourcing payroll, which again, many companies do today. But we looked at what are the key processes that could be done by a third party. And that wasn't really the best answer in some cases, because we lost control in many instances of what was happening with the third party, and trying to get the third party to follow the same metrics and culture and reporting that we were. Defining the business case is one of the key points as you're moving to the technology, and matching the technology with your strategy. And one solution, of course, doesn't fit all. And one thing I'll mention now is many companies looked at business process automation. And the strategy that they developed sometimes stemmed around, if we look at finance across the board, where should we actually focus our efforts with business process automation? But we're going to look at all our financial processes and then determine where we should prioritize first, but we're looking at a holistic approach with technology and of course pulling in our people and process. Okay, we're going to get a little bit more detail here as far as we define our strategy. And what I found, in some of the examples that I told you about was having some sort of governance. And this is really the oversight process that sets in place a methodology for funding requests or process changes within finance. And these models sometimes include an advisory board or team, and they provide recommendations on where to enhance performance. Another key piece of the strategy is establish performance metrics and measures, and these help inform the strategy by identifying process opportunities. And those could be, as I mentioned in AP, invoice processing, exceptions, transaction costs, and areas where technology investment can best be leveraged. And one thing we talked about already was the competencies of the finance department and how they change as the finance function is performed. And my experience, again, in departments like accounts payable and, certainly payroll, the individuals tend to stay, or the staff tends to stay in that same organization for years. And they're so used to doing, their jobs a certain way that that's why we look at competencies and what's needed as roles are enhanced in number 4. And what is happening here, departments like accounts payable are now armed with more data and less transactional duties. And we're talking about a digitally transformed organization and a modern organization where we're looking at getting more value out of our finance transactional roles. And what happens in this case is we move from operational to strategic. And, again, in a perfect world, we have seamless access to information. And this applies to suppliers and stakeholders. And they don't have to remember where to look for a piece of information. It's in a seamless database or a report that's automatically run where they don't have to scurry around and ask where the information can be obtained. Distributed empowerment is another key point, and what we're looking at here is that there's been an explosion of consumer-facing e-commerce, and finance should also recognize the increased capabilities of buyers and accounts payable and strive to meet the usability expectations that has been built up away from the office. So what we're talking about here is we know how easy it is to get information on spend, from any sort of personal money management system that we're using, how easy it is to order from Amazon and see where your orders are and understand what's happening there. And what we're really looking at is how can we take those wonderful user-friendly applications that we see as consumers and move that into the office, and particularly into finance and accounting functions. Okay, and need to know. We know knowledge is power, and it extends beyond supplier contact information and spend data. And what we're looking at here is if we modernize finance, we should have timely and accurate data available to stakeholders and suppliers as possible, including the status of requests, approvals, and payments. And that can happen in a application like a supplier portal, where it's not just a status of an invoice, but it's a status of the entire account. So that's actually helping to reduce any friction between buyers and suppliers. Okay, next we look at the organizational impact with identifying key activities and responsibilities. And that's what a lot of consultants look at, and they do a mapping of the as is environment, and then they define the to be. And the strategy here that we're talking about is what do you want to be and what needs to happen in your new finance organization. So we talked about pain points and where to focus, but we also look at process gaps. Where are the problems? We know at a high level what many of the pain points are and the process gaps are, but we need to take a look at the gaps and problems that impact performance within financial processes. And of course, business goals. Now, when I started my career as a controller several years ago, we had something called a business partner. And if you were a controller for an operation like logistics or inventory management, you had to make sure that you understood the business goals, and not just, certainly from a budget and forecast process, but from a business plan forecast. How can you align your activities as a controller or CFO to what the business needs to do? Make sure you define your stakeholders. Every stakeholder needs to agree or at least have an opportunity to contribute to the transformation or modernization process. And define your process owners. And business process owners may have the best feeling for how the big picture fits in with their process. And sometimes their direct staff could have the best insight into what the real problems are in the process today. And having worked on transformation efforts before, if you can get, again, that direct staff involved, you have to set up some boundaries, because they'll certainly tell you where their pain points are. And, certainly it could be a siloed view of what they're seeing is wrong, because they may not understand the dependencies and interdependencies of how the finance world all fits together. Okay, so a project plan for implementation. I always recommend to start small and take it a step at a time. And going digital doesn't mean you have to completely revamp your entire process all at once. And we used to call it the big bang implementation, and it doesn't always work. You sort of hope for the best, but you don't always get the results that you were expecting. Start with a small piece of the pie, and when you're digitizing paperwork or a workflow within accounts payable or even within the financial close, uh, simply moving to e-signatures, it's important to understand what you're implementing and how it benefits your process. So what does the implementation of e-signatures or e-payments or e-invoicing do to impact your entire AP process, as an example, and certainly focus on your biggest pain point. Ensure you can analyze data to prepare for the future. And don't invest in complex data analytics. Be sure you understand what kind of data you need and how to interpret the information that you'll get. Align with corporate priorities, such as sustainability. And what is happening here is we want to make AP and procurement a fundamental part of the company's innovative practices. We need to get, certainly AP and procurement or procure to pay kind of out of that stepchild or silo mode, and really take a look at how they can help the corporation and add value. And, this is a key point that we've talked about quite a bit. And it has to do with, again, getting the right finance talent to support the new technologies. And as I mentioned earlier, technology alone isn't going to help solve all your problems if your team doesn't understand how to use it. I've implemented many systems, sometimes focused on internal controls and risk management. And what we do is we go back to see if the organization is actually using all the functionality of the system. And what happens is they reach a comfort level of how to use some of these tools that I'm talking about, and they don't move any further. And what happens is they're not really getting the value of the technology. So going back and doing sort of a post-mortem or a post-implementation review to make sure that the technology is being used and actually to go back and see if it's helping to solve some of your pain points. Getting leadership on board is key as well. As we know, finance isn't a lone wolf operation. We need organizational support, not only at the CFO level, but certainly getting IT involved if necessary, and getting some of the key stakeholders of the company involved, such as supply chain, and in some cases, certainly logistics as well. All right, here's our roadmap for modernizing finance. We have our business case roadmap, which is really going to delve into people, processes, and technology, the project plan for implementation, and we talked about a holistic approach or a holistic transformation, scalable technology, and foundational technology. And factors for a successful implementation, and certainly includes a rapid implementation with the right resources working together, having that advocate testing, and the right mindset. And one item that sometimes falls on the floor is UAT testing, user acceptance testing, and that's really making sure that all the beneficiaries of the application have been involved in the testing, and they sign off on it, and they actually do a good job testing using scripts, and along with testing, of course, includes training. And just to reiterate, the project plan for implementation includes starting small, understanding the data, aligning with corporate priorities, developing talent, and getting leadership support. Now, years ago, what HP did is they decided to outsource AP and payroll. It was one of the corporate priorities, but the homework was not done, where we had really looked into the processes, and we had really looked into the outsourcer that was picked. So as a result, it was almost a perfect storm. The outsourcing process really didn't work because the company had just acquired another company, and SAP had just been implemented, and accounts payable. So it was very, very difficult to get everything corrected, and that involved bringing back many of the accountants that were involved in both payroll as well as AP. So doing your homework is very key, and focusing on people, process, and technology get you there a lot quicker. All right, we have our next polling question, and the question is, which challenge is creating the biggest obstacle for your finance team?
All right, thank you, Chris, and that's up on the screen right now. So I'll give everyone a chance to respond. All right, Kristen, looks like we have 31% responding change management, 23% manual processes, and the other three responses are getting equal votes with reporting and analytics, new technology, and all of the above. So I'll go ahead and close that out.
Okay, thank you. Yeah, that's what I've seen, and certainly identifying the biggest challenge is it's change management, and there's, as you know, really no silver bullet for change management, because again, we're looking at those three components: people, process, and technology, and we have to figure out, all right, how do we impact the change? And what I find really helps with change management is having really good communication across the board. And it's sort of human nature to, wonder what's happening and a major change like a implementation. And they want to see, how they can fit in and help and be involved. Okay, let me move on here. Okay, we're going to talk about utilizing best practices for AP and the financial close. And we got another polling question right off the bat here. And the question is, what area of the monthly close process do you feel has the highest risk and visibility? And the choices are recording transactions, closing and consolidating, data and reporting, or all of the above.
All right, I'm going to go ahead and close that. And we have 43% responding recording transactions, 43% responding data and reporting, and so the rest is split between closing and consolidating and all of the above.
Okay, good. Thank you very much. Yeah, I found in my years in working in consolidation, it certainly improved as technology was enhanced over the years, but a lot of it was focused on getting the right data and reporting. And a little mini case study for you. When I was working in consolidation at a corporate level at Digital Equipment Corporation, which became part of Compaq and then HP, we were consolidating 32 different general ledgers. And that meant that the downstream impact of all those levels of consolidation, we needed to make sure that that data coming in was correct. And we had to do some sort of reconciliation and flux analysis to make sure that the data from one month didn't change significantly to another. And there was always some kind of a fire drill because one of the general ledger owners would submit the wrong data and we'd have to back it out and redo the closing and consolidation effort. So that's a good response. Thanks for that. All right, we're going to dig into both processes, kind of our benchmark here. And one is accounts payable. And what we're showing here is what the key components of accounts payable usually are. It starts with the supplier master, setting up the supplier master, setting up a supplier, obtaining the right tax information, W-8s, W-9s, and looking at compliance screening, making sure that supplier is not on any government watch list, such as the Office of Foreign Assets or any sort of watch list. With invoice processing, most companies perform a three-way match, in some cases a two-way match. That can certainly be automated. E-invoicing and some manual invoicing is still occurring. Receipts and PO flip is also a consideration for invoice processing. Accounts payable usually owns the P card process, and that means that they're responsible for admin and controls and reporting and analytics. There's usually an owner of the P card program, and that's somebody that may report to procurement. But the admin piece is usually in the umbrella of accounts payable. T&E processing, payment processing, audits, reporting and analytics, the payment process. And this is where we have payment approval, hopefully with some sort of automated workflow, ACH, P card, and wires. Some companies are still processing manual checks. Looking at auto payments, which is recurring payments, how can those be automated, if you will, so we don't have to worry about including them in a payment run. Accounting processes, accruals in the fiscal close we talked about, GL, cash management, clearing accounts, and customers of accounts payable are suppliers in some cases, procurement, because procurement needs to take a look at service level agreements, strategic sourcing opportunities. And in some companies, if you have to report results back to a shared service center, that is also considered your customer base. And last but not least, reporting analytics and metrics. Producing metrics and analytics, and then tracking results and trends. I worked with a large company to set up AP analytics, and it was, all right, what is your benchmark that you'd like to achieve maybe for cost per invoice? And how do we track those trends? Because if you look at metrics in a vacuum without looking at the impact of trends and fluctuation analysis, it's really half the battle. You really need to look at how things all fit together from month to month, quarter to quarter, year to year. And the foundation for AP, internal controls, compliance, ERP systems, and accounts payable automation solutions. And I really like this chart. It shows you how complex a manual invoice process looks like. And, again, not to focus too much on it, but we're really looking at all the disconnects, hands-on keyboard, manual typing, manual validation, and then performing the match and, going back, to make sure that matching process is confirmed and getting the invoice ready for payment. And what the key points are, the supplier, certainly can generate an automated invoice and can alleviate several of these steps. And the question is, from an audit trail perspective, would it be easy for you to find or verify a part of any of the above? And I'll focus on scanning here for a minute. And what I had the opportunity to witness a few years ago, I worked with a client and they were very pleased that they thought that their invoice processing process was automated. And I said, all right, well, show me what you're doing. And they go, we scan all our invoices in, and then they can be viewed on the ERP system. And they had actually a big room where scanning was happening and invoices were filed, but that was their opinion of automation. Other opinions or definition of automations could be, all right, well, we get our invoices sent to us by a PDF file or a spreadsheet, and what we're really looking at is how can we alleviate the manual typing and scanning and hands-on keyboard to get to that automated or transformation or modernization environment. I just wanted to show you here and what the types of automation are. Some of these I've mentioned: supplier portals, e-procurement, e-invoicing, PO to invoice conversion, and some cases for companies that aren't really ready to move to a full e-invoicing environment, it's managing documents. And yes, I'm mentioning invoice scan here, but what we're doing is taking a step further, is capturing that data. Automated matching, automated workflow approvals, e-payment, system access verification tools, and self-audits. And what we're talking about with system access verification tools is making sure that we don't have any violations of segregation of duties, with people having access to systems like accounts payable and procurement that are not in those departments. Okay, this is our last polling question. And the question is, have you automated any components of your AP process?
All right, Chris, looks like we have 58% saying no and 42 yes.
Okay. Oh, that's interesting. Hopefully, what we're talking about today will give you some ideas for those that are looking at moving to the automation process. All right, we're going to jump into financial close for a couple minutes. And what we're doing with this chart is we're drilling down to what happens within each component. And we've broken it out even a little bit further. If we look at transaction accumulation and reconciliation, we're accumulating financial transactions for that fiscal period. And we want to make sure we finalize accruals and transactions per the fiscal close deadline. And that's always a challenge. As you probably know, somebody always needs extra time or gets something, a post-close or management adjustment in during the close. Reconciling GL and resolving variances. A subledger close, if we go into the next component, subledger close, we're closing all our subledgers, reviewing intercompany results and purchase price variance issues, review results and process adjustments if needed. And the last box of closing consolidation, we do that consolidation of financial results, prepare preliminary financial statements. We used to call those work papers, review results and provide adjustments if needed. Now, one thing that worked really well during the close and consolidation process, we used to do a controller's review, particularly during that consolidation, just to make sure everything was processed correctly. And those controller reviews would be maybe about 15 minutes or so. And what we wanted to do is highlight something that could be a driver of a financial statement adjustment or material adjustment. So those were very productive and those closing days of closing. And then the final mile is reviewing and analyzing financial results and determine if post-close adjustments are needed, prepare financial statements for the fiscal period, and if you're a public company, announce earnings. And as you can see, the drivers or the foundation of this process are internal controls compliance, financial transactions in general ledger, and process automation. And I'll go through this quickly in the interest of time. I want to make sure we save a few minutes for question. And I got this from SF magazine, and what it was focused on, the article was focused on the real costs of manual accounting. And this is really more applicable to the financial close, but the opportunities to cut the real cost of accounting are auto certifying reconciliations, cut the manual data extracts, reduce waiting on close tasks, having a very tight closing checklist is important here. Auto match transactional detail, and that would be in some cases using AI powered rules to take a look at those processes like bank reconciliation, credit card matching, internal control reconciliation, and matching invoices to purchase orders. Automating journal entry creation, using an approval workflow engine, talked about that one quite a few times, and centralized supporting documentation. If, again, for that audit trail that we talked about, auto attach all your supporting documentations and identify exceptions automatically, which could be an alert or a trigger. Shift to auditor self-service, which, again, that's a perfect world, but certainly enable auditors to log in, access reconciliations, and the supporting detail. Streamline intercompany. I spent a lot of years working with intercompany transactions and reducing intercompany back and forth, centralizing and reconciling intercompany transactions and balances across countries and geographies. All right, so that is it. We have time for any questions that you might have, and we'll see where we are with those questions that hopefully have been coming in during today's webinar.
All right, thank you, Chris. We'd like to now take your questions. If you have questions, please submit them in the chat box. And let's see, our first question came in and it reads, how do I establish my priorities when establishing a modernization strategy?
Yeah, that's a really good question, because quite honestly, a lot of companies, a lot of individuals are kind of afraid to start modernization because there are so many solutions out there and they don't know where to start. So what I would do is, break your financial processes up into flowcharts like we showed, and Figure out, again, maybe number two is figure out where your biggest pain point is. And it could be, well, gee, the cycle time for processing an invoice is too high, or the cost to process an invoice is too high as well. Maybe I focus there. Maybe, if we talk about other processes for a minute, maybe I need to look at cash application and accounts receivable and see how that can be automated. But a lot of it is understanding your processes and using this information that we looked at today to maybe give you some guidance as to where to focus. And again, when I look at automation solutions, both in accounts payable and the financial close, there's so many wonderful solutions out there. It's really, again, prioritizing, making sure you've got the resources, doing your business case, and then going through an RFP, maybe selection process to determine who the best partner for you is. So again, very good question.
All right, thank you. All right, yes, we have another one. It reads, why is it important to fully understand my current processes before I undertake a modernization initiative?
That's a good question as well. Sometimes you hear, well, gee, if you just automate for the sake of automating, your process isn't really going to improve. And what I've seen is that if you take a look at almost the process flow for accounts payable that we looked at and figure out, okay, what should I do first? Where's my biggest issue? And maybe, looking at, okay, what business partner or solution partner provides the solution to as many pain points as possible. So there could be a provider that does not only workflow automation, but they focus on e-invoicing and they focus on, maybe streamlining system access and, figure out, okay, if I'm just worried about system access, I've got an automated process, you can look at companies that provide those system access tools. And maybe there's one that fits in with your ERP, like Oracle and SAP, provide a lot of tools as well. But then again, to really get into the nitty gritty of the transaction, companies like Topalti certainly can get you there as well with the online screening that happens for suppliers right through invoice processing. So that's really, again, the best approach, and understanding where you are today with your processes. You might have a hybrid. Some things, as I mentioned, might already be automated, and you might want to, certainly take a look at, okay, where are my gaps? Where are the disconnects? And one way I always look at it too, maybe another bit of advice for you is, what process has the most spreadsheets? And that's probably where you can start as well. So very, very good question.
All right, thank you, Chris. And let's see. Our next question is, what if my AP department has been integrated into a shared services structure? Should I take a look at my entire shared services department?
Another good question. So shared services, as we know, is certainly a good option, and it became very, very popular probably, I don't know, I want to say like 20 years ago or so. And I think with automation, you want to look at processes. And if you look at shared service, break it up into what is the process that's happening. You want to again look at where are the most spreadsheets. What is the cost per transaction? And one thing that's important to mention, whether you're in a shared service organization or you're process driven, having a set of just basic metrics for where you are today is important, because those should be improved as you go through the modernization and transformation process. So again, to answer the question a little bit more detailed on shared services, you may benefit for looking at where are the processes that can be automated, and again, how can you reduce costs? And one big question too: are you in a shared service environment where the shared service center is in your company, or is it has it been outsourced? And working with an outsourcer is also an option. they may have benefits that have been identified for automating certain processes. So, again, shared services, look at your processes and look at where the most pain is, as well as the spreadsheets, and look at where you might have the most cost impact.
All right, Chris, looks like we have one more question that's come in, and it is, why do modernization and automation projects fail, and what is the biggest success factor?
Again, a good question. I worked with a local university here in Virginia, and one of the things they wanted to figure out is, okay, what can I automate and procure to pay? So they didn't want to just look at accounts payable, they wanted to look at procure to pay. And what I had to do is again, understand what the current environment was. And believe it or not, they actually had a decentralized accounts payable process. So they had 3 different accounts payables, and needless to say, 3 different supplier master processes and multiple segregation of duties issues. And what the biggest obstacle obviously was to automating is we had to do a lot of change management up front. So one of the biggest obstacles to automating or modernizing your process is change management. Because again, if we look at, okay, we're going to combine all those accounts payable departments, we're going to fix your supplier master file where you've got good controls over it. Needless to say, the resulting impact of this very, I want to say, convoluted procure to pay and AP process, we have a lot of fraud. And we had to address all those things and almost do a process cleanup before we looked at automating. So the message here is understand your current process, because if you automate a process like I'm talking about, you're going to end up with the same pain points. Those pain points aren't going away. And what's the biggest success factor? Well, it's really having the right people on the project, having very good communication, having a solid project plan, and focusing on, again, hate to repeat it again, but focusing on the impact on people, process, and technology, and then measuring your success when you've completed the automation.
All right, Chris, that was the last question. I'll turn it back to you for closing remarks.
All right, I'd like to thank everyone for participating today. And this is certainly a process and an initiative that I have a lot of passion for. And I think that, again, my key messages are understand your process, start small, and, focus on where your efforts should be. And don't forget the people, process, and technology. So thank you very much.
Thank you again, Chris. On behalf of CFO Daily News, I'd like to thank you for attending the webinar. This concludes our program.